Welcome once again to our online forex class. And then the last time we talked about trading system. That was our previous uh, tutorial here. And then we talked about the characteristics of a good trading system, you know, and we actually touched three. We said it is in three uh, areas, which is a direction, entry, and exit. So last in the previous video, we learned about direction. That is, direction has to do with the trend, because there's no other way to make money in the forex trading without getting the direction right. So once you are able to get the direction right, then it is sure that you will make money after all other things have been considered. But then trend is actually important, very, very important. We talked about, that trend moves in three directions. The first one is a hop, which is actually mean that we are looking to buy. Then the second one is consolidating. That is when the price is moving sideways. So it's not going up, it's not going down. Then the third one is uh, down, which is downward trend. So in these three ways, some people we are making money in it, but the two important ones are the up and the down trends. Though there are some trading system that make good money during the consolidation, but you know everyone with his own system. I told you that always do what works for you. Mr. Trader A may have a trading system that is having to do with consolidation, or for the trend to be moving sideways. You may be making money with it. That does not guarantee that you too will make money with the same system. So this is the reason why we put up this online forex class, so that you can learn how to develop your own trading system. Even if you bought trading system, or somebody gave it to you, or somehow, once you are able to spot the characteristics of good trading system in that particular trading system, and you tried it and it's working for you, don't look furthermore. Make sure that you sit down with such system, learn how it works very well, because the more you practice with it, the more you get to know how to use it very well, and the more you know how to use it very well, the more your profit increases. That is, your way of trading improves, and it helps you to make much more from the market than losing. We also talk that there is no perfect trading system. So once your trading system is able to give you like 60 to 70% profit rates, it's okay with the risk reward ratio 1 to 2. In fact, that is a very good system. So even if it is giving you 50-50 profit rates, at least even with risk reward ratio 1 to 1, if it's able to give you like 60-70, I mean, you will be in money. So now we are moving forward to the second point, which is entry for today. So we have so many entry points by which we can enter to the market. I told you in the previous video that even if you are able to get the direction right, you know that the trend is either going up or down, and you actually want to enter. If you enter wrongly, you will surely lose that trade. And after all, we see still price going back to the same direction that you have gotten. So that means you got the direction right, but you got the entry wrong. So we are going to talk about entry points where you can enter safely, and where you can get a better price that will give you just a minimal risk level. Now let's go on. The first one is retracement recovery points. Retracement recovery points is where the market actually had a brief pause. The way the market moves, just like this one now. The market moves like this. Just like that. So this, you see the way it moves in a zigzag manner. So that is how the market moves. If it is up, if it is down, same manner. But then where are the recovery points? Where are the retracement levels? This is we actually know that the price is moving upward like this. So now this area are the area where the price is pausing. That is where the price retrace back and then move forward, retrace, move forward. So it's a brief pause for the market to breathe and then to move back up. So this area are the good area to enter into our buy levels. So when the price is recovering, going back up again, you can enter from this place. Then you enter from this place. You enter from this place. But these are the good areas. So that is the area. This also. So you enter from here. So those are the places where it is very good to enter into the market, especially when you are buying or when you are selling. So that is recovery points. So immediately the market retraces back and then recovers and trying to move back to the previous direction. Then you enter just like I show you now. Then the second one is support and resistance levels plus rejected candle. And then I want to talk about rejected candle. This rejected candle is very, very important. It is in fact like 80 to 85% accuracy, because there is a reason where let me even show you the rejected candle. In the case of buy, rejected candle is like this. So what this means, sometimes it may have a very small whatever. So what this means is that the price this is the candle now. That means the price in the case of buying now the price, this is where the buyers had already stepped their authority, and they now pull back the price back up, and then the price close here, the session close here. So but it's open there and then they pull it back up. No, this may be MA, EMA, this may be moving average, or it may be trend line. It may be trend line. This one may be support. Yes, support. This one may be support. But wherever the candle actually touch and then reverse, that means the price is being rejected. So and then the next one is a breakout of the support and resistance. This is, let's assume this is our resistance level, this is our support level, and then let's assume that we want to buy, and then the market just move like this, get to this point. So when you look at it, then if there is a breakout like that, then maybe somehow you know that the price is moving up like that. So it's happening in the case of sell also. So those are the areas where you need to target to enter. And then I've talked about moving average briefly. So moving average may be going like this, and then the price is moving, bounce back or slash through or continue to move upward. So this area, you most likely to see something like this. This rejected candle is very, very important when you want to enter. So that will show you, it will help you to know. And then when we are talking about this support and resistance level plus rejected candle, it depends on where you the kind of market you want to enter, whether it's a buy trade or sell trade. If it's a sell trade, that means we are looking at resistance level. So, and the slash through or just bounce back from the, this is going to be the resistance level. So like that, and we are coming down to sell. Now at this area, some people are talking about, retouch or retest. Now I want to clear issue on that area. Now, if not, let's look at it this way, because I want us to be practical. Let's forget about theory. Let's be practical, because the market is practical. The market is a live market, and that is what is happening in the market is what you are seeing. When you see the market moving like this, drawing some candles and lines and that, these are the graphical representation of what is happening, the activities of both the buyers and the sellers in the market. So what you need to do is to look at it. Let's look at it this way. Now they said when it breaks out, it has to retouch and then continue to move in the right direction. Now, do you know that sometimes the market may just break out and begin to go without coming back? That means you will lose the market, because it is not even right when the market had moved, is moving and it's going like that, and you now jump to enter. It may be the time when the price may want to, form retracement. So if you enter that way in the midway, it is very, very risky. The market may at that point reverse back, because there will always be a retracement in the movement. I told you, look at this one now, just like this, moving up. So if you see the market moving like that and you jump in around this place and the market now move back at you, there's no way you will lose that trade. So now I want to suggest something for you, and I want you to practice it. Just try it. Now if the market break through, whether it is going to continue or it is going to reverse to touch this level, just like they always teach us that we should wait until the price move back and touch this level and then move up. Now what you need to do is immediately it breaks out around this place, like maybe 5 pips above that level, I want you to enter buy. In this example now, we are looking at buy trade. So buy, and then make sure that you put your stop loss around this place, especially if the space between the distance between the resistance level and the support level, they are not much. They are just we are still within the range of your stop loss that you can afford. So it's a risk. So the risk you can bear. So when you enter that way, even if it comes back and retrace, it will only come down to your entry level and then move back up again. But if you are waiting for price to reverse, to do a retest or a retouch before it now moves on, but the price refuses to do that and begin to move on like that, you will lose. In fact, you will miss a very, very good opportunity, golden opportunity to make money. If you are now want to now jump into the market, it may hurt you. So this may happen. The market may reverse back at you, because it must surely observe retracement. So I hope you understand what I'm trying to say. So try it. It is for your own good. Then the last one, which is Fibonacci retracement levels. So this one, if you are using it, fine. If you are not using it, fine. But it is almost the same thing. But then let's do something. So we are assuming now that we want to buy, and then you had already, the market had already moved and moving back again, expecting it to move back up. So this is a level of retracement. Now this is a level of retracement. Now this is the trend, upward trend. So you now draw your retracement, the forward retracement from this level now, from this point up to this point. So when you draw it, it now gives you lines like that. So line starts from 0 to 100. So if the first one, we have some important key levels in the Fibonacci retracement. We have 23.5, we have 50, we have 61.8. So those are the 3 key levels. So when the price now touch that area, something like that may happen. Always take note of rejected candle. It's very, very important. Rejected candle means that when the price is moving that way, in the case of buy now, that is, the buyers are still in control. So whenever the sellers are trying to pull it down, the buyers are successfully overpower them and pull it up. So that is the area of struggle where some people or some set of traders, either buyer or seller, are being defeated. So I will speak much. If we still have time, I will talk much about this rejected candle, but let's finish about our entry point. So now, if the price comes down, it can go back up from this level, from this 23.5 level, from this level. When it goes back, then at that point you'll be able to buy, and then you enter around this place. If it goes down, slash through this place, come down to this place, and then go up, you can enter from this side. So that is still showing that it is just ordinary retracement and it's going back upward. So but if the price have to slash through this place and move downward, that means it is no more a retracement but a total reversal. So that means you have to just wait. And then I told you that don't always rush into the market. The market will tell you what to do with it. So you don't rush, with the aim of you don't want to lose some pips, you don't want to miss out. No, you will not miss out. Once you get it right, the market will do it for you. So don't always rush into the market. Be patient. Patience is a very good virtue that a trader must possess. Patience, patience, patience. Wait and wait. Wait for market to give you what it wants you to do with it. It is the market that will tell you it is time to enter, it is time to wait, it is time to get out of the market. So when you are able to wait or exercise patience, you will see things clearly and you'll be able to do the right thing and you'll be happy. So now, as you can see now, but always take note of rejected candle. So by the time you enter, the market continue to move, and then that's it. So we have so many other points at which you can enter, but because I don't want this video to be so long, that's why we continue to talk about it. We even if you get to exit, we still come back to entry and join them together, just like did it today with the direction and the trend, because they all work together. So when you get the direction right and you pick your entry point right, then the next of your concern is how to exit the market without being losing what you had already gotten from the market. So at this point, we are going to talk briefly about rejected candle and give you some rough explanation, some practical explanation that will make you be able, when you see a candle, be able to interpret it. So let's go there. Let's assume this is our buy candle, this is our sell candle. Now, buy candle opens here, closes here. Sell candle opens here, closes here. So now, when the market opens here and is going up, That means the buyers are the one in charge of the market, especially that section. So when it moves up like this one now, you can see that we have they call it spike, some people call it horn, some people call it anything, just so by the time this one, the market, the buyers are moving it upward, then the sellers also struggle with them, and then they are able to move it back down here, and the section or the candle close here and it close here. So another one, if they are still continue buying, another one will make this place open here, which will be this place. This is close area for this candle. This one will be open in the same level, open area for this new candle, new buy candle. So now when you see a candle, it is a place where there are struggles between the buyers and the sellers. So when you see the maybe I don't know what color you use to decorate your chart, but I use my own either blue or green for buy candle, then red for sell candle. So when you see a sell candle, know that the sellers are in charge. When you see a blue or green candle, that depends on what you use to signify it, then knows that the buyers are in charge. So when you see they are just dragging it, and it also goes along with support and resistance. This resistance level, this resistance is the area where the sellers are standing. It's like when you are at the battle front, and then so the one party is around this place, the other party is around this place, so both of them are fighting, trying to take each other's territory, so resistance is the territory for the sellers, support is the territory for the buyers. So when you see the price got into support and is unable to break down, and it just bounce up back again and begin to move, that means the buyers are in charge. So before you know it, that resistance level will be taken by the buyers, and it will turn to, that is when we have a breakout. So that means the buyers that are coming from their territory, they are taking the territory of the sellers, and then that's why we have a breakout. And then if whether I retouch or not and begin to move like that, by the time you retouch and turn, this one will now turn to support level, and then to create another resistance level. So what happens there is that now we call it flip area, that is support and resistance that turns to support. So that means if we continue that way, that means the buyers are the one taking territories, pushing the price up and up and up and up. So and you can see, we always talk about demand and supply. The more people are buying, the more the price increases in value. So that is exactly how it works in forex trading. Demand and supply, that's the natural law in the area of business, and the same thing applies to forex trading and all other assets that we are trading. So as long as they use charts, and it's a business, life business. So at that point, I want to say thank you for staying around. I believe you have learned one thing or the other from this video, and I pray that everything we are learning will be to our own advantage. We will not be like a fool who watch, it says a man who goes to the mirror, see himself as he is, and he went away, and immediately after he forgot who he is or what it looks like. That's a fool. So everything you have learned here, try to practicalize it, try to apply it to your, it may be one thing that you need in your trading career that will make you, that will bring a turnaround in your trading experience. So let's continue to learn. We'll come back again next time. So this one, I want to implore you, if you are not subscribed, please try to subscribe, like, share with others, and then click notification button so that you can be notified whenever we post another video, new video like this. So for now, I want to say thank you for being there. My name is Olufemi Adeyemo, the founder and the president of Open Gate Success International. And then for this forex part, I have a school called Open Gate Forex Academy, and that is where from on the stable of this Open Gate Forex Academy, that is where we have brought out online forex class to reach out to people, especially the traders that are struggling in one way or the other. Every one of us will need to learn new things every day. You learn until you leave this world. You continue to learn. So I'm still learning. So I can learn from you. You can learn from me. But for today, I challenge you that whatever you have learned here today, if you know that this is one of your major problem, or even if it is minor, try to apply it. It will bring a turnaround in your trading experience and your trading career, and it will be better. So it can only be better if you continue, if you determine, and you know, consistency is the key. You know, it brings accuracy. It makes you become perfect more and more every time. When you are practicing and you are consistent with this, it will help you a lot. So until next time I come your way, this new month that we have just entered, it will bring so many pips, green pips for us, and your account will continue to be green. So see you later. Bye bye for now.